What's good, YouTube? It's your boy Zay, and welcome back to Setup Sunday. And I want to wish you all a happy Labor Day weekend, as well as Tuesday is your boy's birthday. So shout out to your boy. Drop a comment wishing me a happy birthday. I definitely appreciate that. So listen, I'm a year older, a year wiser, going on Larry Bird. And since it's like, my birthday, I was like, you know what? It would be good to reflect, right? Like where we are, where we've come from. And so today's Setup Sunday episode, we're going to like take a look at where we are and where we come from, right? So I've been doing Setup Sunday. I'll never forget. The first episode was March 22nd of this year. That's when I started the series. And we were pretty much coming off the correction at that time, and we've been tracking it all the way coming up. So I think it'll be dope to kind of look at, okay, this is where we started, this is where we are, and kind of like let's talk about where we see ourselves going forward. What does that trend look like? Like everybody's talking about a correction and all that stuff. What are the scenarios that we see that could possibly play out from a technical perspective over the coming weeks and months, and like how to kind of think about positioning yourself. So that's what today's episode is going to be about. It's all about reflection. For those who've been rocking with me and been watching every single episode, we've seen, like I said, we started this at the end of the correction. We went through the June correction, many predictions, but we tracked it all the way up and down. And so it's gonna be good to see where we've come, the levels we've conquered, and I think it'd be dope. So don't forget to press the like button as well as subscribe to the channel so we can keep this thing going. And without further ado, let's get into the video. All right, guys. So we're going to make this episode. I'm going to try to get through this as smooth as possible because I do have a couple of things to share with you guys. So as I said, we're going to be journeying back, right? So we started this episode. I started doing these episodes in March. Now, if we look at the NASDAQ and think about where we come from to where we are, the NASDAQ is up. If we go from this low to this high, is up about 24%. All right. So just keep that in mind as we go through these levels. So what to expect for September, right? Quad witching is upon us. There's going to be a lot of things that potentially could, move the market over this next particular month. So when we look at it from, say, institutional levels, right? So these are monthly candles, and you think about where the market really wants to go. This trend is telling us that we want to go up. Our Bollinger Band has room all the way up to as high as 16,580. And then we have Dan Ives' target, which was 16,000. If you guys watched that episode that he did with on the comment series, then you would remember he kind of said, hey, my target was 16,000. So I put a level there, and then I got a level where the Bollinger Bands are. Now, this is kind of just saying, hey, from a monthly perspective, at the end of the month, we have room to go up to these levels, right? Now, of course, we need to break it down to really get a feel of, okay, is that really going to be possible? Because if you look from a monthly perspective, we do have a gap right here, right? So at worst, 14,687 could be the month low, right? We could actually pull back, kind of sell off. And if you look at from where we are technically right now, if we pull back to that level, that'd be a 4.5% pullback. Now, everybody would probably be like, oh my God, the market is falling, the market is crashing. But in reality, all we really did was just take out August gains and come back and fill a gap. And we're back at where July closed. So just, again, keep that into perspective. So like, let's just make sure we understand that the month's low or a critical level to pay attention to on the NASDAQ will be 14,687. Okay. Now, on the flip side, right? Most people ask like, yo, how do you know how we can go? Well, we have to do this. If this is going to be that range, and if it breaks out, it's going to be the same way to the upside. So I would just take this kind of trend line and put it right here. And then that gives me, and actually I'm going to really start it from where we close or where we open right here, right? Look where that lines up perfectly on 16,000. So if we break up, we're going to 16,000. If it comes down, we'll probably come to 14,673. So that could be the trading range for September or October. This is what we need to be paying attention to. So from a much larger time frame, a high of 16,000 and a low of 14,687 could be expected between these next couple months, right? So let's dig in deeper a little bit and kind of go further, right? So now let's go to a weekly perspective. You guys know that's my favorite. So looking at it from a weekly perspective, what to expect next week. And again, it's hard for me to say, hey, we're going to do this next week. It's like, I got to just say, hey, like, this is my theory over the next couple of weeks, because there's so many things that are a factor that, you know, this is how we can kind of see the market move. And there's a few different scenarios. So if we look at it from a weekly perspective, number one, we're coming into a holiday weekend. So we possibly could gap up, right? And if we do gap up, here's how I would say kind of that first level you might want to pay attention to, or that top, or the first resistance level that we could possibly hit. I'll show you how I kind of determine it. So what I'm actually going to do is go down to the 1 day. And so from a 1 day perspective, right, what I would do is add a support right about here. Now, what I could do to kind of figure out, okay, if we were to run into any type of resistance, what would it look like, is I'm just going to use a trend line and say, hey, this is the trading range that it had when it kind of consolidated here. So if it were to break out, I can at least expect it to go as high as 15,477. So basically say 15.5, right? So that's kind of like, hey, we need to probably pay attention to some resistance at this level if we do break out, right? So again, if we do continue to keep going past this level, what do you say, okay, how do we figure out what's that next level? Well, same thing here. This was the breakout, and then I'm just going to go to how high we went here, as well as take this trend line and then move that from here. And then that gives me my second level, which is about 15,585. Right. So this is how I'm going to assess, or I'm proofing my levels. This is one of the ways you can proof your levels. Now, some people may use fib extensions, and I'm just going to show y'all something pretty dope. Try to keep it cool. But just by me proofing, I'll add fibs on just to get confirmation. Now, if I wanted to add my fib, I'm going to go from here, this low, and I'm going to put it right here, right? Because this is resistance at 0. Now, peep game, right? So the next fib extension they have is 15,642, and then you have one at 15,978. I told you my levels was 16,000, and then just by me proofing, I came up with 15,585 as well as 15,381. And so the ultimate target, the target number 3, could be with my fib extension, which is 15,642 for the NASDAQ, right? So that's kind of how I'm assessing, like, if we really break out and we go full bull mode, those are the levels that I will be paying attention to personally, right? So this is how I'm coming up with it, and this is how I'm assessing the coming weeks. Now, to the downside, right? To the downside, let's talk about to the downside. To the downside, you already see 15,153, right? That's going to be, if we come down here, well, you know, if we can't break through this 15,381, or where we're at is 15,363, more than likely, we could possibly get a sell-off to 15,153. That's how I would look at the NASDAQ. So I want that to be support. If that doesn't hold, then we coming right to the trend line, which is at 15,000 even, right? And so I'm just going to remove the fib extension, because even if I was eyeballing it or doing how I do anyway, there's a gap here. So I'm thinking we coming to fill this gap anyway. So if we cannot fill, or we cannot get through this 15,383, it's possible we could be on our way to come back and fill the gap. And the gap is at 15,130, right? And so the fib, I think it brought it basically down to the trend line, which was at around 15,000. You can see that our 20-day moving average is curling up, along with our 50-day is curling up. And so those are the levels that I would be paying attention to, right? So like we could possibly be trading sideways. So this is the main trading zone that we're in right now, which is a high of about 15,363 with a low of about 15,282. So once we get a definitive close above this level or this level, that's going to tell us the direction. So if we get a candle that closes above here, more than likely we're going to try for these 3 targets. And if we get a close below this level, which is 15,282, and more than likely first level we're going to come to would be 15,130. And if we break that, then you might as well book about 15,000 as low as 14,947. All right. So that's the NASDAQ. That's kind of what I'm looking at as far as over the, it could be next week, these next 2 weeks, but I feel like that's going to be that trading. This is going to be the trading zone that we hang around, and the highs and the lows and kind of what we'll see playing out. So with that being said, let's get into the triple Qs, right? Like, how does that look for the triple Qs? So for the triple Qs, it'd be the same thing. So if I go through that with the same exercise, let's go to the monthly. Think about where we're at, right? So I remember when we first started talking about it, the triple Qs was down here, hit a low of about 297. My goodness. We actually watched it come down to 315 as well. So these would have been great entries. I mean, 315 to 381. When you think about a long-term perspective, you look at it from a monthly perspective, you got the 3 white soldiers. So this is just a beautiful, beautiful chart right now. And the trend is still up. So when you look at it from a monthly perspective, the Bollinger Band gives us room all the way to go as high as 406. So that could be like our end of the year target. But you can see that from a monthly perspective, this thing can really, do some work. Now let's drill down a little bit. Let's look at our weekly perspective. So you can see we did some consolidation and we broke up. And so the trend is telling us we're going up. Now, most technicians would say that, hey, the next candle, we're probably going to see another candle go up. Now we could get some wick action, meaning we will kind of do a little bit of a pullback. And when I go down to the day chart, you'll figure out what, we'll see what those levels are, but we'll have a wick, and then ultimately we'll kind of push up, and maybe, the target will be about 390, 392. Now we're going to do some proofing so I can give you what the exact targets would be. So let's go to the 1 day, right? So for the 1 day, right now we got this let me make sure I'm zooming in here correctly. So we got 382 that's acting as resistance. Got a gap here. So if we wanted to proof, we use our trend line like that, put this bad boy right here, and that gives us our target for next week or for the next 2 weeks, right? Which would be 388, so basically 390. And then if we really get a big breakout, remember how I did that. You just take the last 2 weeks, and then you're going to put it right about here as well. And that gives us target 2 of about 395, right? And again, if you want me to, I'll even throw some fibs on that bad boy. So this was about where we, let's see, let's go to right here. Because really this is the move, right? This is the move. This was where resistance was. And so if you go like that, because this is where we failed to break out. Now we're breaking out. Now you can see 382 hits it, put us at that 0.27. Now if we keep going, you could, 401 is that ultimate target. I think from a monthly perspective, we said the Bollinger Band gave us 406. So again, it gives you another target 3. You can come down from the 406 because of some just, buyer's exhaustion. So aim for 401. So you can see from the upside, if this thing keeps pushing, you got price targets 388, 395, 401, right? Now this is from going into the end of the month. Now to the downside, you do want to be paying attention to 376 as support. So I would just change this to red color so we know, right? So that has to be support. If that does not hold, then automatically 368 off top, 368. 368. And if we go to a 1 day, you're going to see, and I'll remove all of this stuff. So now you can see what it looks like, right? So if we can't get through this 381, this will fill a gap at 376. We're going to fill a gap. If this breaks down, then more than likely we have this gap here, right? That's why we say 368 automatically to the downside. So that's how you want to protect yourself. But if we break out, the first breakout, we have a pit stop at 384. More than likely, 388 will be that ultimate target. So that's kind of how I'm looking at it for the triple Qs. And then so what we'll do is we'll go to next is the S&P index. So we're going to do the SPX. Where are you at, SPX? Yeah, bingo. All right. So let's go through the SPX. Same scenario, right? Same scenario. So we're looking at the SPX. And so if you look at the SPX, this thing has been booming. 1, 2, 3, 4, 5, 6, 7 straight green months.
No red. The last red month we had was January of this year. So you should have probably just loaded the boat in January when we was at about 3,600, and you could have just rode this bad boy all the way to the top. So it leaves us to say, hey, where are we going next? Now, from a monthly perspective, people have been getting very, very bullish. I think I can't remember what firm, but they just came out with like a 48.45 price target on the S&P for the end of the year. And if you look, the Bollinger Band is now giving us room to go as high as 47.93 from a monthly perspective. So let's just keep this in perspective. This is a trend line that you'll see as we go down, but that's a really, really high target. But you can see that if we break this, there's nothing but green skies. There's no real resistance up here. So it's just a matter of, well, how high can we go? So what we would do is we're going to break it down to weekly and daily to kind of really give us some perspective here, right? So when we look at the SPX and where we are, you can see we've been killing this trend line, killing it. Every time we get to it, we bounce. And if you've been watching Setup Sunday for a while, you know that every time we've gotten here, we've talked about it like, hey, these are good buying opportunities, and then we've been seeing the bounce. So as we've now bounced, right, we can use this the bounce as parameter, or as a parameter of where we're going. And then I'll show you how I would do this too. But let's go back and let's just do our proofing. So for proofing, we're going to go down to the 1 day, right? And really, I think the real target everybody knows is 4,600. So let's just go ahead and plot 4,600 on the SPX, because if you are really a trader, you know SPX is really trying to get there. So we're going to have a level right here at about 45.09, right? Because there's a gap. And then we've been kind of stuck in this trading range. So to proof, we're going to go from here to here. We're going to throw that bad boy right up there. Boom. So if we can close above that 45.37, then the next target will be about 45.66. 45.66 is where we could see us aiming, right? So I will put it over 45.65 just to be conservative. And if we wanted to get a feel for like if we really, really decided to break out, boom, look at that. That's to see, look how that works, man. Proofing right at 4,600, 4,600. We get another big breakout like this, it takes us to 4,600. So pit stop is at 45.65. If we can clear that, 4,600, right? So you see how I did that. Same thing to the downside. If I just do more proofing, you can see, and that just like that. So you already know for the SPX, your first support would be around 45.09, right? 45.09. And if we break through 45.09, then more than likely we're coming back to about 44.73. 44.73. 44.73. Okay. So those are going to be the main levels you really want to pay attention to, because it's a matter of if we get a close above 45.37, right? Then that means more than likely we're headed to 45.65. And then there's going to be, more of a decision time. Hey, do we're probably consolidating here? Do we kind of come back and then maybe bounce to 4,600? That's going to be that scenario that is possible. Or do we get up here and break down and come back down to the 44.74? So this is why I'm like, these are the key institutional levels we need to pay attention to over the next couple of weeks or so. All right, so that's kind of what I'm looking at for the SPX, right? I gave you the levels to the upside and the downside. So let's look at the SPY. How does that translate to the SPY? If we look at the SPY, let's go to a monthly. Again, we're going to work our way back. Let's work our way back. This is where we come from. When we first started it, I'll never forget. SPY was at 389, y'all. And we talked about it. March 27th was like, yo, our price started with 400, maybe 415 or something like that. We are now at 453, which is crazy, man. We've come a long way. So how far can we go, right? If you look, the Bollinger Band to the top gives us room to go as high as 478 from a monthly perspective, guys. And just I should have probably did this for the other charts, but I'll give you guys just so you can see that's another 5.8% to the upside. Just FYI. All right, so let's go break it down to a weekly chart, right? And let's see what we got. So let's do some proofing to really figure out our levels. So if we look, let's go in. And boom. Our first level support is going to be 450.34. And we're at that 453. So our target for the week to the upside is 455. 455.64. 455.64, right? And then remember, if we get the real big powerful move, right? We get that real, you know, hey, we breaking out, we out of here. 460. 460. Or roughly, I'm gonna keep it 100. This is 459, so basically 460. And again, to the downside, y'all see what it is. Look how beautiful that fits and proofs. So to the downside, 450, right? 450, and we will be looking to possibly come close this gap, y'all. So I mean, this is at 444, 443. Wouldn't be surprised to see us dip and go below here and just test that a little bit. That'd be a hell of a drop, but it can happen. It can definitely happen. So that's kind of, again, what I'm looking for over the next couple days to weeks and how this trend plays out. Again, if we get a close above, you know, this 454, more than likely 455 is next. We could possibly consolidate and then look to go to 459. If we break down and we come back to 450 and close at 450, more than likely we're going to be looking at this 446, right? Actually, I'll say about 447. And then if 447 as a whole, then pretty much you could say hello to 443. That's how I'm looking at the SPY over the next couple days, weeks, you know, as a swing trader, because these are going to be some pretty big moves and these are going to be some pretty big decisions. So we look at it from a weekly perspective. Look how beautiful, you know, that kind of lines up, right? So if we can gap up, we know what our upside targets look like. And then if we kind of are going to come down, we know what our support, because once we break this, we already know we're coming back down to 443. So that's how it works out. All right. So let's look at the Dow Jones and we'll go to the DIA real quick. We're going to knock those out pretty fast. So looking at the Dow Jones from a monthly perspective, guys, the Dow Jones has been running. So this is January. It opened right around here. And so let me just kind of remove some of these, like, these are like day trading levels that y'all see. And let me just kind of clean this up a little bit and just show y'all how I would look at this practically. So off top, you can see the Bollinger Band is giving us room to go as high as 37,981. That's pretty big. So for the Dow Jones, looking at where we're at, that would be an additional 7% on the year. Okay, an additional 7% of upside on the year. And when you think about all the things that are at play, it is very, very possible with how the market and valuations have caught up. So 7% is very much doable. So let's go ahead and kind of plot some levels as we look at it. So let's go down to a weekly perspective here. All right. And you can see, oh, my bad. You can see how we've kind of just been consolidating, slowly going up, but consolidating at the same time. Nothing too powerful on the Dow Jones. Just steady, just slowly drifting up, So for the Dow, what I would want to see is that it's basically been, and for the Dow, it's pretty easy, right? Because the Dow has been facing a heavy resistance at around this 35,487. So basically say 35,500. And it's tending to bounce right in between 3,050 or 35,269. I'm thinking about the diamonds because I play those sometimes. So it's been trading in this range, right? And so if we get a break, and just by using our trend line, and really you can see where we would be headed. We're going to probably take on this, but also make a new all-time high. So this all-time high was 35,631. We will look for the Dow to make a new all-time high, roughly at around 35,695. So it will be going for 35,700 or so, right? And if we break out or break to the downside, then you would be looking for the Dow to possibly look to kind of come fill this small gap here. So really small gap when you look at it from a daily perspective in between here, which is about 35,898. So say 34,898. So think about 34.9. But this does give you a floor of about 35,000 even. So that's possible as well, because you did have some consolidation. So you would think that this would hold up pretty strong. And don't forget, you do have this gap here. So it probably would take that out, come test a little bit. And hopefully the 50-day would catch up if needed by here. And so that kind of makes sense when you think about the proofing aspect and like, okay, over the next couple of days to the weeks, what will price movement look like? And when we finally do get a break above one of these two levels, where is it going to next, right? So if we look at the Dow Jones, that's pretty much how I would be looking at the Dow Jones. I think I said from a monthly, for monthly it's pretty high. I don't think we're gonna go that daggone high, but you can see us possibly break out to that 6. And then if we look at it from a weekly, I'll give you another target, which will be about 35,786 from a weekly perspective, because the Bollinger Band is starting to open up a little bit. So, you could possibly be seeing us finish the week as high, or even at some point in the week get that high on the Dow Jones. And so you just go back down to a day. So you kind of got your upside targets. We want to get to 35,487 first and close. If so, we should be, taking on these new all-time highs and can possibly head to 35,695. And if we break out and keep going, 35,786 would ultimately serve as like we need to, we running. And to your downside, watch out for a break below 35,269. You come fill this gap at about 35,126, as low as 35,000. So looking at the diamonds, how does that go into the diamonds, right? So let's look at the diamonds. We brought the diamonds into Setup Sunday later because we really wasn't looking at this. But if you think about it, from March, this thing has went from 306, right, roughly, or 305, now all the way to 354. So a nice run. You can see from a monthly perspective how it's starting to build up, and it looks like it's ready for that big breakout. When you look at it from a monthly perspective, the Bollinger Band gives it room to run as high as 380. Okay, 380 by the end of the month, or by the end of the year. And so when we look at it from a weekly perspective, for the DIA, 354 is serving as pretty much some good resistance. So if we break out and we go to our proofing mechanism, let me just go ahead and do that. See, I already had these levels set, so I didn't have to change anything. We've been trading between 354 and 351. So I would just go ahead and do like that. And 358 will be the next target, because ultimately we're going to break this 356. And if we break this 356.55, then we're going to about 358. So those will be my two upside targets. To the downside, again, I'm looking to see if we come to 351.18, right? So ultimately, if 352 breaks, then it's coming down to about 351. And if we go break that level, then of course the next level support's at 348. So watch out for, essentially just pay attention to 352. Then you're probably coming to 351. And then if that does not hold, you're probably coming to 348. You can see how there's a bunch of consolidation up in here. And so that's really what you want to pay attention to, as far as, again, just the next couple of weeks, as far as price action and where it could go. And we just need to see how does it react when it hits those price points, right? So with that being said, let's get into I believe we're going to hit the VIX. I'm sorry. Let's hit the VIX. So let's take a look at the VIX real quick. So looking at the VIX is building a base. I'm sorry. We need to be very careful and pay attention. The last 3 days it's been building somewhat of a base, and it could, start to take off and lead into a little bit of a correction, right? Because we've been talking about it. Whenever the VIX hits 20 and can sustain 20, then ultimately we'll probably be entering a correction phase. Now, the crazy part is we really can't sustain 20. It gets up here, automatically sells off because people are coming in and buying dip. Gets up here, sells off. Gets up here, sells off. Gets up here, sells off. So the question will be, do we get up here, right? The question will be, do we kind of shoot up? And then if we do we sustain it, or do we see the usual sell-off and kind of just feel like, hey, it's a normal body dip situation? Because we are going into quad witching, as well as the Fed meeting later this month. So as far as levels to pay attention to in the VIX, you can see that it fell, going back to our previous episode, it came down and hit our gap perfectly at the 1567. We called out all these gaps at 1707. It came back and hit and filled, bounced, all that good stuff. So we pretty much know our trading range. So what we need to do is do we get a close above 1707? If we do, more than likely, we're going to be headed to about 1839, as high as 1887, right? So let me just change it to a weekly perspective so you can really see. So it's really a hammer here, right? So what we need to see is, do we get a break below the 1567, right? So can we push down to 16? Do we push down to 1567? If we break that, then ultimately I would be looking for a bounce, or us going down to about 1518. And then if we break 1518, then you can see 14.2, and ultimately there's going to be a bounce somewhere over here. So we're getting to those levels where the VIX loves to bounce, right? This is definitely an area where it doesn't get much lower. There's a lot of support in this area. So or next week, do we see a bounce and we get through 17, and then we get to 18, and then all these wicks and all these people get stopped out, and do we hit 20? Now, another thing I want to point out about the VIX is, on a weekly perspective, we are about to hit a death cross, meaning the 50-day is about to cross the 200-day EMA. And this has been going on for a while. So really what this tells me is that the economy and volatility is coming out of the market, because we're starting to get back to some type of normalcy. If you go back and look at previous periods, there's times where the VIX is just trading in a small range for a long time, because we're in a normal environment. And so the gains are going to be more moderated. They're not going to be as big. So you really have to, hone in on your skills if you really want to make money. And so that's what it's really telling me, is that, for the foreseeable future, this is possibly going to be the trading range, or is creating that trading range for the VIX. And this is just going to be the volatility that we'll have to live with. There'll be times where it's pretty low, and it'll spike up, and it'll just create this like a heartbeat effect, if you want to call it. Kind of like the RSI, if you look at the RSI. And so that's kind of like what I'm paying attention to in the VIX. And then let's go to our favorite, the US 10-year Treasury, because this also is playing a part in how the market is moving. Now, when we think about the US 10-year Treasury, when this goes up, think about the banks, industrials, and materials, because they go up as this goes up. And this kind of can hurt tech a little bit, but now I think we'll be in an environment where tech is going to be able to live with the rates going up, because remember, when this went up back in February, tech corrected. So there'd be no reason for it to, recorrect per se. It might do like a little bit of a pullback if it goes back up, but that'll be something to watch. Now, for perspective, look at it from a monthly perspective on the US 10-year. I think back in March and April, we talked about like, hey, this is probably as high as the US 10-year is going to get. And we called out we was calling for 112 for a while. And if you look, it took 4 months for it to happen, but it slowly drifted down, and it came down, and now we're bouncing. So a lot of economists are talking about how the treasury yield is going to go up into the rest of the year. Well, from a long-term perspective, you can see we're back at that point where in February, this thing really started to take off. So you could possibly be seeing a squeeze, or you could watch out for a squeeze, because you can see this thing could really take off and run up to 1.6. It can catch some heat. Like, it caught some heat, and it could do it again. So that's what we want to, watch out for. So from a weekly perspective, you can see that we now have a nice bullish hammer, and it's hammered right on the 50-day. So this thing is looking like a trend reversal to where it's ready to start making that run back to that 1.7. So I'm definitely watching the US 10-year as we go into the end of the year for this thing to slowly start working its way back up to 1.7. Now, as I said, it's going to probably take till about the end of the year, but week over week, this thing's going to steadily climb. And we need to be paying attention to how is the market reacting as this thing climbs. Now, if it starts to break down, then banks and industrials and stuff like that are probably correct or go down, and tech will continue to do well. So, that's just something to keep your eye on. And then the last thing is the dollar index, right? We talked about the dollar index. That was something that was new introduced. And as this thing was showing a nice double bottom, it's starting to break down and it's looking like it's coming to retest. And again, we called out, hey, you want to watch for 93, 92, and we have now come to a nice level of support around this 91.80, 91.85, but we're right at 92.11, right? So really, when we look at this level of support, the thing is this: if we break below this, more than likely, we're probably coming down to this 91.49, right? Right where the 20-day moving average is. And then that will kind of confirm, hey, a breakout and a pullback. And then the next key decision will be, does this 91 hold? Because if 91 doesn't hold, then it's a wrap for the dollar. It'll be a full breakdown and you'll see this thing come all the way back down to about 90 even and 89, and the market will just go in full rally mode because the dollar is usually a signal of risk on and risk off. And as you can see, the past 2 weeks, the dollar's been falling and the market has just been rallying and doing pretty good. So going into next week, it's like, hey, do we see a breakdown past this 92.11? And does the dollar index get down to about 91.49 and hold? And then from here, what is the next reaction? Do we start to just consolidate? Do we get further breakdown? Do we get a hard bounce and kind of continue going up? You know, those are the things that we'll just need to kind of watch and see how do they play out from a week to week span, because that's going to kind of really give us a gauge of where the market is going. And so let's go ahead and finish it up with our favorite Bitcoin, Bitcoin and Ethereum. So getting into Bitcoin, it's crazy because when we look at the from a monthly perspective, look at Bitcoin's chart. Now I got some, some graphs and levels and we'll get into those in a second. But again, when we started tracking Bitcoin in March, it was way up here. And I was like, man, this thing's going, I was actually calling for the pullback. And it finally pulled back. And I thought, I was calling for the 20K. But you can see that 28.9, that was pretty good. That was solid support. So I don't think we'll see 20K. Looks like these buyers are pretty sturdy in here. So the days of 20K is gone. And it looks like that 28 to 30K wasn't great. That was the bottom. That was probably the bottom for Bitcoin and a great buying opportunity. Institutions definitely stepped in and bought that thing up. Now look at where we're at. We're at another pivotal point. Now for the month of September, we know that crypto likes to rally into the end of the year. So when we look at it, we are in a nice range. If we break above on Bitcoin, if we get above this 51,072 I have here, you can see there's going to be some resistance when we get into these levels, but there's like nothing but upside, especially when you look at it from a Bollinger Band perspective and monthly candles. Like basically by the end of September, it's saying that Bitcoin could be headed back to 62,000, basically 63. So 62,948 will be the top of the Bollinger Band. So let's just kind of break it down a little bit. I don't want to get people hopes up. So from a weekly perspective, we have this nice bullish trend. Once again, we've been tracking it. And now we're seeing these two indecision dojis. So what happens is if we get a close above 51, then you can see what has happened before. We typically run up to at least 57 to 55. So 55.7, so basically 55,000 to 57,000 will be my target on Bitcoin if this thing breaks above 51. And then from there, it kind of would do a little bit of consolidation. Now, if it breaks below 46,270, more than likely we'll probably come back down to about 42,000 and test these levels, and we possibly could see 40K. But again, I don't think so. I mean, we've now at 50,000. Like you had your chance to buy 40K, you didn't, and so I just think like the bull is back, and it's no need to bet against Bitcoin, because if you believe that Bitcoin is going to go to 100,000, $1 million one day, then at the end of the day, you got to be a bull, and you just got like, you know what, it's time for us to continue going and buy 40K. So I think Bitcoin is definitely looking like it's consolidating and it's ready to make that next move and challenge the new all-time highs and possibly break out. And it's going to be a beautiful thing. Let's just look at Bitcoin as we go into the end of the year. So, a lot of people are calling for 100K. It can do it. If you look at the run it had from last September into this December, I'm just going to show you from a percentage perspective of what it did. So It was at a low of September, hit a low of 9,825, so roughly 10K. And by the end of December, that bad boy had hit a high. I think, yeah, what was the high on December? High on December was 29,000. So I think I'm actually a little bit too high. All right, so it ran 197%. So we do the same thing, and I had to squeeze my chart just so y'all can see this. So we go from where we are now and do 197%. I mean, that's wild. You see what's happening. I will put Bitcoin at like 133,000. So it's something ridiculous. But let's just, kind of say, even if Bitcoin did 100%, right? Do 100%, half that. Half of that puts you at 91,000 by the end of the year. Half of that. So you see my target for the end of the year is about 91,000 on Bitcoin, and you have some pit stops at about 77 and, like I said, 62. But when you look at it from a monthly perspective, now there's going to be some volatility and all of that. But by the end of the year, we could possibly see Bitcoin hit $91,000, which would be crazy, and I would be happy as hell. And so, yeah, that's Bitcoin, guys. Like, that's kind of just, again, where we've come from and where we could be headed. And, just don't let the media and all that stuff get to you. And then the last thing is Ethereum. So again, March of 2020, March 22nd of 2021. I'll never forget that very first episode. Ethereum was at 16. The low was at the close at 1650 or 1686. And I was like, yo, this might be a good entry, 1700. That 1700 has been the bomb entry, because when you got it at 1700, it's bounced every single time. And that has become the new support on Ethereum. I thought it was going to come to 14, maybe. I even had a low at about 800, but that 17 was strong. And I remember we watched that whole run up during April and going into May. And I mean, it was crazy. So now look at that. It corrected and is basically done that whole move back. So you should, if you could have stayed in and you fine. So look at that correction and eat it all back. So now Ethereum is about to run. Let me keep it 100. That's why I've been bullish on Ethereum the whole time. So you can see that we are now closing at where we were back on May 3rd. We are back at May 3rd levels almost. So the next technical level for us to break out or challenge is really this 4,394. That was the high, or 4384. If we break 4394, we'll probably go to 5K on Ethereum. And again, we're talking about by the end of the year. So by the end of the year, Ethereum's definitely going to be at least 5K or more. And that's why you can see people are saying, hey, there's people with estimates of 10,000. I mean, here's what I would do. I would say, let's say we get a repeat of that type of move, or let's do proofing. Proofing, right? Let's do some proofing. If we get another big leg, another big breakout, and we go from here, but by the end of the year, it doubles. There we go. 63.25 will be my end of the year target on Ethereum. So 5,000 is in the bag, and ultimately we could see Ethereum push to about 6,300 by the end of 2022 or going into 2022, and that would be a whole bag. And there's going to be some good buying opportunities, but yeah, Ethereum chart looks beautiful. I mean, it looks beautiful, guys. So as I go into next week, I'm looking for full breakout. It could come back and retest. If it does come back and retest, look out for 35.44, right? 35.44 to be the level that will be respected as support. And if we break it down to a day chart, you can see this is the trading zone we're in. And this is the reason why 35.84 would be a pretty good support. And if we can continue to hold that and break up, that would allow us to go from here to about this 43.94 and challenge that and keep going. So I've given you guys a full perspective on the market overall. So it's, you could take it with a grain of salt, because there's going to be stocks that outperform the market. There's stocks that underperform the market, but use that as a guide. But in closing, I say that to say that, look, don't fight the trend. Yes, could there be a correction around the corner? Possibly, but right now we look very bullish. There's a lot of money in the system, and you don't want to fight the trend. And if you do see a correction coming, be patient and definitely load the boat, because you know what the road ahead looks like. Don't be scared. So guys, I hope y'all enjoyed this episode. I can't wait to catch y'all next week. Y'all know the phrase, stay blessed and peace out.
Run it up, run it up. We out for generational wealth. Who else but us? Run it up, run it up, run it up. This is first gen wealth building.